Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the Bitcoin market. So in Bitcoin we're mostly watching for major retracement after the first significant upward action, which could be in the reestablishing of the long-term bull trend. This market has formed kind of the bullish reversal pattern because it has exceeded the previous swing down. So if you will take into consideration this one, that one, or even this one, this rally stands greater compares to them, and that is the usual normal first stage of the new bull trend, when the market first breaks the existing tendency of lower lows and lower highs and create the new upside reversal swing. After that, as a rule, in most cases, deep retracement should follow. This is normal market mechanics, because retracement stands due to the existing of the long-term bearish momentum that stands on the market. Actually, the market was in a downward trend approximately 2 years, slightly lower, slightly shorter. It's almost 2 years, and the bearish momentum can't just disappear in the market. It still stands there, and it will press on the market and trigger the meaningful retracement on the market. So this retracement is needed just to fade down the existing bearish momentum. After that, the major trend should start to the upside. That's this is called the third wave on the Elliott wave theory. So currently, guys, we consider the retracement. By our suggestion, the retracement probably already has started. Initially we thought that it could be, but it could take different shapes. So first one is a direct retracement, just some few candles back down somewhere to the 70 even area, or it could show some extended pattern. For example, it could form this first retracement, minor retracement, then back to the top, complete the major COP target, and then start some kind of the ABCD action down. So what I would like to say is that here we could get, for example, some head and shoulders pattern. By the current price action that we see, chances on direct downside retracement exist. So without any significant extended pattern, just direct downward action. Mostly because of the price behavior that we saw on last week. So if we'll take a look at the daily chart, here are actually the two different scenarios that were talked about. First one, as I said, this is direct A, B, C, top, D pattern. So this is OP target, XOP will stand lower. Alternatively, speaking on the hand and shoulders, it could be the butterfly. So that could be the left shoulder. If butterfly will be completed, it could be the head, and then market could start from right arm as usual and downward action. Currently, guys, take a look what we have. On Friday we see the strong collapse down, and you can see here the acceleration right to the OP target of this AB equals CD pattern. This is the bearish sign. The one thing why market was able to hold here, as I suggest, is that deep oversold area. So market again dropped to the oversold and hit the same confidence support area on the daily. So this area already has been tested, also in the condition of the oversold, has led to this upward bounce. If you remember, we have traded this godless triple to sell pattern that has been formed here. As market starts dropping down and market has formed bearish reversal candle, we said, well, we will not deny totally the idea of the butterfly, but we change its shape. So because initially, if you remember, we talked about this butterfly, this direct upward action. But until this loss holds, this butterfly could take the different shape. And theoretically, the butterfly is still valid because this bottom stands above the A point. Once market will drop below the A, it will erase the butterfly even theoretically. But as I said, taking into consideration this drop on Friday, it makes us think that this is just a question of time. So when the market will leave uncomfortable oversold condition, it will continue move down, and the butterfly probably will fail. So that's our suggestion that probably could be realized on the market. On the intraday charts, as a result, we could keep an eye first on this ABCD pattern that we have, with the target around 90 even, approximately 89.70. So that's the AB equals CD target this market could reach. Also, we could keep an eye on the closer targets. For example, recall our previous analysis. We talked about these head and shoulders, and we said that first to the 11 even, then to the 12 even, and then we will see. That was our suggestion. And actually, on Friday morning, when I have taken a look at the chart, market was starting upward action, but it hasn't quite reached the 12 even area. But now you can see that both targets have been completed. Right arm has been formed perfectly. Market already almost has completed this target. So the target of this hand shoulders pattern is the AB equals CD based on the hand shoulders, and it stands around 96.87, 97 approximately, 97 even. So that's the nearest target. So if you have to take the short position, you could think about taking the profit, because market stands at the result and the confidence support. Some bounce up from the 97 area probably will happen. I don't know how strong it will be, but some retracement respect of the OP target, pullback here is possible. Then we start to watch for 90 even area. So that will be our short-term analysis.